Welcome to the Market Buzz. I'm Greg Schnell, host of the Market Buzz. Each show, we do a deep dive into different industry groups using weekly charts on a long timeline. Please follow me on social media as Schnell Investor. And for timely insights, some of those postings might be a little quicker, so that might work. And then for blog articles, please check StockCharts.com as well as GregSchnell.com and see if there's anything that you find interesting over there. So, welcome to 2021. Lots going on this year. We've got kind of energy and materials so far leading the market for these 2 days. We can't say that for very long, so hopefully from my perspective that keeps up for a while. Today I want to cover off 5G, and it's just very simple. What are the big stocks related to 5G and how do they look? And one of the things that I was surprised at is, you know, if we use the Scooter ranking or the StockCharts technical ranking, not very many of them are actually in the top quartile. So out of a list of, almost 40 stocks, I think 5 or 6 are up in that top quartile. So a little bit surprising that they're so far behind. Anyway, I think it's worthwhile to go and check on that. So that's what I'd like to cover off today and just dig in to show some of those ideas, because I think once it starts to turn up, we probably all would at least like to be aware of the change in trend and what is working there. So I'm going to start the year with this chart, and this chart is what we call the gap chart, or the price earnings fair value index. And what we've done here is on the green line, that's when stocks in general have a PE of 10, a PE of 15, and a PE of 20. And then the purple line is where we are currently. And as you can see, we are quite stretched. We're up in the top corner. This is probably the widest gap we've ever seen between the actual market and the top of this chart, the 20. I guess over here it was pretty big in 09, but as you go through these dips, where the actual time is relative to the market could be shortchanged. But without a doubt, we're expecting the world to catch up and earnings to really start to improve. And I would say if that doesn't happen, that's probably the biggest risk to the market. So we want to be aware that we are stretched in valuations, and if all of a sudden those valuations have to start coming in, that could be a big problem. And what we see down here for the price earnings of the S&P 500 is that we have this, we see these spikes happened in both of the previous bear markets. And so we briefly pulled all of the economy down, but in general, just because we had the pandemic, not in the late 90s where the internet wasn't really a thing yet. Now we have internet in everybody's home and in school and across the globe. And so one of the things that really happened was that freedom to work from anywhere that we had previously, I'll call it lightly enjoyed, became the primary motivating factor for the markets and for companies to continue. So there's a big trend there that has run a little bit, and we've got some stocks like Peloton that have are overly enthusiastic with PE ratios. It would take almost 2,000 years at the current level of earnings for them to catch up to their stock price. So we have I'll call it bubble-licious stocks, but we also recognize that the economy is going to improve. So we don't want to just take this gap at face value, knowing that if we can actually get the vaccines rolled out and slow the spread of COVID and stop the overloading of hospitals and get people back in restaurants and travel and leisure and all that kind of stuff, we'll probably change up things quite markedly. So that chart, just to start the year, I want to make sure that everybody does realize how far we are from normal, and unless the economy really starts to pick up, and we're about to head into earnings season here, we'll find out pretty quick. Okay, so that's kind of the backdrop for today. The big thing I want to cover off is this is a summary of the 5G charts, and again, when we look at stocks in a list, it doesn't really help us. We can go hover over their ticker symbol or whatever and get a little chart, and that doesn't really tell us much of the story. What we what I like to know is how is the stock doing compared to its peers, and we have different ways of analyzing that. And one of the ones that's the easiest for me, you could use an RSI, or you could use a PPO score, or you could use something like that. But one of the things I like to use is the Scooter ranking developed by StockCharts. And if you think of the world in four buckets, you have the bottom quartile where the stock price action isn't very good, and then you have kind of everything between the 25% level and the 75% level is just average with the S&P 500, and on any given day it could be inside that range and fluctuating, I'll call it similarly to the S&P 500. And then you have the top 25%. And in the top 25%, you have these stocks that the price action is behaving better than the majority of their peers in different groups. And the groups on StockCharts are defined as large cap, mid cap, small cap, and ETF. So in those three groups, large cap, mid cap, small cap for individual stocks, we'll have the Apples of the world and that kind of thing. But on this same list, we can have the Scooter ranking of all three different stocks. So we can actually add the column and say which universe are these stocks in. And as an example, here's a Marvell Technology Group, and it's a mid cap, not a large cap. But we can still analyze it as how strong is the price action, even though it's a mid cap. And then here's Dell Technologies, and we can see all these in here. None of the ones in the 5G world are in the small cap space. So that's probably something important to be aware of. But again, if we want to sort based on the large cap, what we need to do is click through these stocks individually, looking at them, or we can quickly go to the list and we can edit them. So we put these numbers on the front, and I try to show this quite often so that people learn how easy it is to do. But what we want to do is we want to select all, so we're checking off all the charts, and then we want to remove the numbers from. So it's going to remove these numbers from the very front, and we're just going to take them and we're going to dump them off. And now what does that do? So it just shows the stock ticker name. It doesn't delete any of the stocks or anything, change any other data. But we can't sort on this because there's no price data or StockCharts technical ranking data here. So we go over to the summary tab. And so we were on the edit tab. Now we're going to the summary tab. And now we're just going to press this button and say, what's the sort order that we want to use? And you can see here, if we're focused on the StockCharts technical ranking, we probably want to look at the best stocks first. And so that means the number is the highest. And this green column over here is just for intraday, but if I picked whatever the 1 year change, that would show us the change for the last year. And most of these stocks were up 70% on the year, which is pretty good considering we had a nice vacuum in the middle in the second or late in the first quarter where we dropped 35% across the indexes. So pretty huge recovery, and these are some great stocks to look at. So now we want to hold that sort order, and the way we do that, we could sort by their best performance for the year, or we could sort by Scooter ranking, or we could sort by price, or some other quick features that we'd like to sort by. In this case, if we wanted to sort by this, and I'll just show how quick and easy it is, we would just go number in sorted order, and then we would literally just say, okay, go back and look at these stocks in that sort order. Now again, if we decide we don't want to do that, we just go to edit list. This is very quick, and just select all and remove the numbers from them. And I do this all the time. So this is not like something special and you really have to worry about it. It's very quick and easy to just kind of sort them in the way you want to look at them. And then from here, I'm going to sort them now based on the Scooter ranking. And again, I have to go to the bottom and just lock that in. So I'm going to number in the sorted order, and it's done. So hopefully you're getting quick with flexing your lists and looking them at that way. Now in this case, we're going to go start to look at Micron, but what I really want to look at is the view all, where we can just scroll through these charts. So in Micron's case, this is a Obviously, a really strong stock. I think they report earnings very soon. And just so you know, we can also go over to another tab here, and that is up at the top, the symbol summary. And we would just type in Micron, and we would say go. And StockCharts has tried to add this data. So the next earnings date is January 7th. That just happens to be on Thursday. With that, when Micron comes out with that earnings report, some people like to be aware of the earnings dates. I do too. This is a quick way to do that on StockCharts. So anyway, just head over and you want to set this setting up at the top as the symbol summary, and then you would enter whatever name that you were looking for, and it'll give you this little table of contents. Your price earnings ratio and all that kind of stuff is down here, and you can investigate that. Anyway, that's not what we're here to talk about. We're here to talk about the actual charts and what we see as a trend. Now, one of the things that's happening as we start out the year is not just the stocks, but the indexes are all up at very high levels. A 10% level on the PPO, if you go back and look, like Amazon, in some of its biggest runs had a 10% level on my PPO. Other stocks like Peloton have reached 40%. It's very rare to get big moves above 10, 15, 20%. That's a very private club. Not many stocks get up into that echelon. So what I like to be aware of is just that everything is up in this top right-hand corner, well extended from the zero line. And what you can see is, every time in the last 3 years, these stocks have had trips back where they're much lower in move. So we're at I'll call it at the long end of the move, not the early end of the move. Now, up here for almost 6 months back in 2020, it stayed up at this relatively high level. It can continue to do that. I don't doubt that at all. I just want people to understand that we are running really hard and really long and really fast. And so if the market starts to pull back, at least we're aware of why. I mean, we're quite stretched. So in this case, Micron really just broke out through $60, $65 here just 4 weeks ago. It jumped up for 1 week and is consolidated. So this is actually a nice bull flag, and it looks like it's just trying to break out this week. So that's a pretty bullish chart. Qualcom, they're going to get a new CEO running the show, and this chart's just on a nice climb. There's nothing wrong with it. I will say in this case, the PPO, the momentum has already crossed the signal line. So normally that would be a sell signal. I think I'm not sure that you can just pick it as a sell signal. Okay, across the signal line, I want out. But what you will find when you go back and look is that wasn't a bad signal. That wasn't a bad signal. That wasn't a bad signal, because the market did nothing for, better part of 6 months after you got your first sell signal there. Here we crossed our sell signal, didn't do anything for a few months, and now we've run all the way up here, and again, we're at a high level. Now, okay, it could roll over right away, and if it rolls over right away, then it's another good signal. So the bigger thing to notice here, in this case, the 10-week moving average has held this stock for 8 months. And it's been a really nice climb. And when we look back, we don't have very many instances of that 10-week breaking that the stock didn't actually change complexion from an uptrend to a downtrend, or at least a pause. So that's probably a good clue too. If we start to break through some of the moving averages, if we start to see the scooter rankings start to wane and no longer be a top performing stock. So in this case, it's performing better than 90% of the stocks out there. If all of a sudden that slows down, that's a clue to us that something's changing and the investors aren't willing to keep pushing the stock higher. I don't see any of that on this chart yet. So as long as the 10-week moving average is holding relative to its peers, it continues to outperform. I do like to draw these trend lines on the line relative to the S&P 500, and some people would prefer not to have an area chart underneath it here. That's just a setting. So if you'd prefer just to see a line in the sand there, I can just change this from area to a solid line as an example. And that's just going to give you this indicator. Well, it doesn't matter how you shape it, it's trending up. I like to use the area chart because it just highlights the lows and highs a little bit better for me. So that's one of the reasons that I pick it. So there's not a reason for me to use the area chart other than just it's how I like to have the display. So feel free to make sure it's the beginning of the year if you want to set something up a little differently. I like to put a couple of things on my charts. One is the scooter ranking, especially on weekly, and I want to make sure that if I'm in the stock, it's either outperforming the S&P 500 or it was underperforming and now has started to outperform. Like as it goes from the bottom and it works its way through the middle, that's a pretty good place. All of a sudden something has changed in the stock. And in this particular case, the stock has been one of the top performers for the last 2 years. So that's a pretty strong trend. Okay, then my relative strength compared to the S&P 500, I wanted to outperform the index. And then the full stochastic, it's trading up around the 80% level. So if that was to start to fail down, then that's a shorter term sell signal created by George Lane, really a good indicator. But I just like to see it stay in the top half, at least the top 50%. And then the actual price, I just use two moving averages, a 10-week and a 40-week. Then I have the volume on here. And one of my favorite indicators is the momentum indicator because momentum usually changes before price. And in this example, we're starting to see lower momentum even though the price is still holding up. So it's one of the things I want to watch for. Okay, so I think I've covered off all of the reasons I set up the chart like this, and hopefully as you go through the market buzz this year, you'll be able to identify with those different indicators. I'm just trying to get back to the 10 per page view. Okay, so here's Corvo, and again, the stock's trending up nicely, holding above the 10-week moving average, and we're looking at the best stocks at the top of the list. So they're obviously going to be some of the top performers. PPO is still trending up. It hasn't started to cross yet. It is at a high level. Scooter ranking is holding up well, and the uptrend is in place. Xilinx, this one I think is in a merger with AMD. Am I right on that? I think AMD and Xilinx are getting together. So this one is running up. I might have that wrong, but anyway, the stock still looks good, and the PPO is trending up. I would just say it's getting close to crossing its signal line. It has just started to become one of the top performers. Keysight Technologies, the stock's been really running nicely since breaking out early November. That was probably on the back of the pandemic or the vaccination news. And then all of a sudden the stock's been trending up. So pretty nice gain here from 100 to 130. Scooter ranking is just starting to become an outperforming stock, and we can see that it's up at 7.5%, which is pretty high level again. Apple. So Apple actually made its high in September in terms of momentum and has now been just trending sideways here, and the stock price hasn't done much else either. So it was up around 137. It made 138 last week and is just tracking around 130. So let's just call it flat. Apple's been a good stock for the last year and a half. And really, it's been one of the reasons people moved into it, even during the big pullback during the pandemic, was that they had a big cash hoard and people weren't too worried that they were going to lose their capital. This was a good store of value. So it actually held up as a defensive stock, even though it's in the tech arena. So this stock is holding up pretty well, trying to hold above its 10-week. It's a little sloppier than we saw at Qualcom. But for the most part, when Apple's holding above the 10-week, that's a pretty good clue. And when it starts to fall below, a little less strength starting to show up in the stock. Okay, so here's Broadcom holding up above the 10-week. Everything's nice. And again, we're looking at the top stocks here. We're starting to get to the ones that are just barely above the top 25%. This one's at 76%. Still looks good. NXP Semiconductor, this one's, again, living in the top right-hand corner of the chart. Prices started to get a little bit less aggressive. So what happens with the scooter ranking is it's measuring that its pace or its rate of growth in the stock price. And in this case, we've moved from 110 to 160 in 6 months, and that's probably, call it a 30% increase. Well, a lot of stocks have done that, so it's really just a little bit better than average out there, based on the time span that we use to calculate the SCTR. Looking at Arista Networks, this one's broken through to new 52-week highs here, kind of popped up in November and then has, I'll say it made it to 260, and now it's worked its way up to 290. So it's still been a nice move, but just generally pushing higher after that big kind of surge. I find this type of stock hard to invest in because when I look at the chart, you see all of these giant moves, and it really doesn't trend well. It's kind of all over the map. So for me, this would be a harder stock to even want to purchase because it doesn't really trend. Marvell Technology, this one's really, it's been pretty good, holding above the 10-week for the most part. Had the one dip there just late October and then immediately reversed that. It's been trying to get through this $45, $46 level for a while here. Briefly pushed up and then hasn't done anything for 3 or 4 weeks. Scooter ranking is moving down below 75 after being above for almost 8 months. So something's starting to change. The investors aren't kind of holding it up as well. And just if you look back on the right hand or on the left hand side here, as investors were starting to, I'll call it, not hold the price up as one of the premier stocks in there, so it wasn't moving up as fast, it started to underperform its peers, and that's really what this line shows. This line shows how it does compared to 500 stocks. This compares it just to all the mid-cap stocks, and so just a little different way of viewing the markets. But again, when it's starting to underperform after outperforming, something's changing. So in this case, it looks like it's waning a little bit. We're just not seeing the love that it had before. Analog devices. Again, a lot of these semiconductor names in this space pushing up quite high here from 110, rolling up to 145 or 150. It's been a good sudden surge. You can see we're up around 6% on the PPO. That's kind of as high as we've ever gotten on the 3-year window. We could look back if we wanted to, but for 3 years, this is kind of as high as it's gotten. And then we've got a trend line here in momentum. If that started to break, I'd probably be a little more concerned. Dell Technologies, so IPO'd roughly 2 years ago, right? In December of 2018, so just a little over 2 years ago. It hasn't done much since it got up to the $68 level in August, and then this tech kind of corrected in September. This didn't really have that correction, but it's definitely knocked the wind out of its sails. And for the most part, the last 6 or 7 weeks, it's just closed pretty much in a straight line. So we're starting to see the momentum wane because it's just going flat now. And what was really starting to outperform is now starting to just mellow in performance. Texas Instruments, this chart goes back farther. This one's set on daily, so let's just go in and fix that. Just want to add this weekly update, and that cleans up the charts quite a bit. That's fine. We'll just save it as Texas Instruments. But the point I want to make here is when the chart cleaning up the bars, it makes it a little simpler. And then again, the scooter ranking just gives you the final reading of the week. So the PPO ranking will change based on a daily chart or a weekly chart. But the scooter ranking, the measurement is the same. It will have the same value on a weekly chart, a monthly chart, a daily chart. Whatever the last close is on that chart will be the same on all three. That's not the case with the PPO. Anyway, this chart's running up, holding above the 10 weeks, so as long as that continues, I would say that it's a stock that's behaving better than 50% of the S&P 500. It's holding up above the top half. So it's outperforming the S&P 500, just not very much. And again, the computer will rank. It'll take all of the low and the high measurement, and then it'll set the scale. So it will alter the size of this scale. So it can make this look more dramatic, even though it might be just barely outperforming the S&P 500. So always be aware that the computer will scale everything and give you a low point and a high point. So just because this looks like it's uptrending a lot doesn't mean it was a big move. It just changed the scale. What we see on the stock in general, though, is rarely is it a top performer, but it is in the top half. Nothing wrong with that. So you're still outperforming the S&P 500. Okay. Let's go back in here. And so here's Corning, telecom equipment. So anyway, it's rolled over. It's kind of dropping below its 10-week moving average. And again, as we start to work our way down in the PPO rankings, we're starting to see that. Here's Hewlett Packard. It was under the 25%. And now all of a sudden started to surge up back to the top of the range. This is what I mean when all of a sudden the stock was underperforming and starts to outperform. Sometimes that can be a nice place to get on board, and we start to see institutions start to pick it up as it starts to improve. As it broke above its kind of prior 6-month highs, all of a sudden the stock started to ramp up. Skyworks, a really big, strong one. I'll say it hasn't done much, right? It was at 137 back in June, and it's only at 150, so it's kind of grinding its way up here, 155. But it's in a really strong space. PPO looks like it's ready to turn back up again and start its next run. I will say there was a lack of volume for the last 3 weeks. I know it's holidays, but still, that's pretty light, that nobody was kind of interested in the stock. Let's just see, is that no sellers or no buyers? And we'd like to see a breakout through the 158 level. And as it goes through that, we want to see some volume come back and hit the tape. Okay, T-Mobile. Yeah, pushing up in the top right-hand corner, it's still okay, but you're starting to see the Scooter ranking say it's, what was outperforming is now starting to underperform. TELUS Corporation is a Canadian cell phone company, and talk about middling. This thing behaves between the 30 and the 70 level. You might as well just buy the S&P 500. It's basically just performing in line. Ericsson Telephone, this one's choppier. It used to outperform. It's been one of the names that was supposed to be an alternate to Huawei. As this is, I'll call it choppy, it's working its way higher, but the momentum indicator is starting to make a lower high and a lower low, so that's not really kind of what I want to see. We're right around the 50% level. It was outperforming, and now it no longer is. Okay, Comcast Corporation, it's uptrending, but starting to roll over again in momentum. And then here's Vive Solutions, and is trying to break through its $14 price. The chart's not as strong, right? The Scooter ranking shows that it's just not really outperforming its peers. Another Canadian telco here, Rogers Communications, pumping sideways. Again, just average. Alphabet, Google, pushing up nicely, but price action is still only better than 30% of the stock, so not that great. Charter Communications pushing up to the right, starting to drop below its 10-week, and you can see the momentum indicator rolling over in the Scooter ranking telling you the same thing. Amazon has actually started to underperform meaningfully, and normally this is a good period for Amazon between December and January as we get the summer or the Christmas gifting season out of the way. Amazon usually performs pretty well in the spring, so watch that one closely for a turnaround, but right now it's been flat for 6 months. And lastly, we'll just stop it here. Bell Communications, pretty much sideways, another Canadian telco. So thanks for taking the time to join me. Market Buzz airs Wednesday mornings at 10:30 a.m. Eastern Time on StockCharts TV. You can also find the recordings by searching for Market Buzz and Greg Schnell on the YouTube homepage. And if for any reason you were looking for my Reflections 2020, just type in Reflections 2020 and Greg Schnell on the YouTube page, and what you'll find is an article that I did, and it talks a lot about the oil patch. I still think it's going to be a nice place to invest for sector rotation. Thanks for taking the time to join me. Have a great week and a good year. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.